financial advice. This video is designed to help you get prepared for this week's trading. Let's go ahead and get it kicked off here with the S&P starting on the higher time frame. So this week we're going to take a little bit of a zoomed out approach and see what's really happening on the market. This past week and a half has been extremely whippy. You know, it's downtrend, it's no trend, it's uptrend, it's back to no trend, back to uptrend. A lot of movement has happened on the market, and it seems to be, an extremely headline-driven market. Now, that being said, currently we are in an uptrend on the daily time frame. So, as always, when we're in uptrend, the first thing we do is we get long the index first, and from there, if the market is telling us to, we continue to add new risk exposure, new long market exposure from the daily playbook. So as we have here, we have the monthly time frame. So each one of these is 1 month of trading. And a couple key levels that I have in here is the anchored VWAP from the 2018 low and also the anchored VWAP from July 15th, which I anchored it from here because I felt like this is more of an inflection candle. So on a monthly, still holding that December 2018 low. So this is the volume weighted average price from December of 2018. And you can see we came right to this level on the S&P, which does nicely coincide with that 50-month moving average. So this month has printed a very strong hammer reversal so far for November. So we would love to see this at least close up here and break the cloud. That would get me more bullish this market. But if we fail and start breaking back below, these 356, 355 levels here on the SPY, yeah, that would expel extreme caution in the market. That could set us up for much, much lower prices. Now, everybody is extremely concerned about timing the bottom, catching the pivot, which is why you see so many people front running the pivot. And, we haven't really had a market that's a free market really since the Fed started, controlling it themselves. So right now we're in an environment where the Fed is tightening. They're reducing the supply of money. They're raising rates, and they want demand to fall to curb inflation, right? So that's not a stimulating environment for a market, which is fine. We want markets to be free markets and find the true bid and ask of where these prices should be, as opposed to what's the next headline and can I front run it for a few extra handles. So the monthly time frame held where it needed to hold, and so far has caught a really good bounce. So yeah, we don't have uptrend on the monthly. We're still in a downtrend, but we do have two constructive monthly candles back to back. So we got to keep an open mind to that. And we did hold this extremely important anchored VWAP along with the 50-month moving average. So those are two things to consider, that maybe the bottom is in for the year, right? If we go back and look at this, when did this cloud actually form? This is going back to 2011. So if you're an investor and you got long above the cloud back here in 2010 and just rode this uptrend, yeah, you're still doing fine. But that being said, just because we got to bounce from where we should bounce doesn't mean that the lows are in, doesn't mean that the bear market is over. It simply means that we held the critical support where we needed to hold, and it's important to keep an open mind for what's to come next. All right, so far, still in a no trend on the monthly time frame, still in a downtrend on the monthly time frame, but held extremely key support. Let's move into the weekly time frame. You can see once again these anchored VWAPs. You can see them kind of zoomed in a little better now, and you can see, yeah, this October 10th week, we poked our toes into the water, quickly came back above that VWAP, and from there, we continued to rise. So on the weekly time frame, you guys know our rules. We got to close inside the cloud, and we got to close above that candle's high. So on the weekly time frame, which is primarily what we utilize for our investment portfolio, we are in an uptrend. Okay, so we have to respect this. This is an uptrend on the weekly time frame. So obviously our trades this week are going to be on the long side, likely going to make adjustments to the investment portfolio and be a little less neutral and more bullish because price is telling us to do so. Now, like I said, do I think the bottom is in? Do I think the bottom is in? Unfortunately not, I don't, but my opinion does not matter. But I don't think the bottom is in. I could see us rolling back over early Q1 next year, maybe even this year, and retesting this anchored VWAP and seeing what happens from there. It's just, like I said, it's not a conducive environment to stimulate growth. And until, we start to see some, economic numbers that are a little bit better and Fed starting to turn a little more dovish or pivoting, that's when we can say, okay, the bottom is in. It's time to load the boat. Weekly time frame, as you guys know, like I just said, we're in an uptrend. Okay, so we finally have an uptrend on the weekly. We've been in a downtrend for quite some time. We've been in a downtrend on the monthly. So now we have uptrend on the weekly, and we also have uptrend on the daily time frame, along with price strength confirmation. So just to recap some of this crazy price action, like I said, it's been very whippy. It's been no trend, downtrend, no trend, uptrend. Very, very tough trading, right? Especially swing long trading. If you're 5-minute day trading, there have been some really good quality trades, but for swing trading, it's been extremely difficult. So, excuse me. So we came in on Thursday, right, after a huge gap up from better than expected CPI, right? So we had, what was this, Tuesday, closing back above the cloud, getting people bullish again, going into CPI, and then Wednesday, gap down, rejected from the 10, closed below the 50-day moving average, back into no trend, and then the very next day, we get CPI data, and large gap up, and then we run the rest of the day. Now, this type of candle is very hard to chase. If you came into Thursday cash like I did, right? It's really difficult to chase a move from 373 on the SPY, and then you gap up at 388, and then you wind up closing at 394. That's a huge move, right? And so it's really difficult to chase. But that's what trading is. If you're aggressive and you trust this market, and we have 5-minute RT after the open, okay, go for it. Most of us were likely waiting at least until we cleared this 389, right? This 389 was a really important level. This was, previous uptrend territory. We got back into uptrend above this candle, and then we had price strength confirmation above the November 1st high. So if you were waiting for that, that was fine too. You wanted to see price strength confirmation to get a little more confirmation on this gap up to see how price would react. That's fine. And even if you waited till the close, right? If you waited till the close and said, okay, we're in uptrend, we've got price strength confirmation, trade like a robot, tells me to get long. Again, the next day we gap up, and yeah, it was not a terrible day at all. We wound up closing green. So long story short, this market is extremely headline driven. We have everybody with extreme FOMO. Everybody doesn't want to be left missing these low prices, missing the bottom, because look, most people are stuck holding the bag from up here, and they're buying this whole way down. And that's not us. We're trading, and in the investment portfolio, we're managing our allocations to what's leading and being cautious when the market is telling us to be cautious. But this is an uptrend, and we got to respect that. So if you're not long already, then coming into Monday, we're in uptrend on the daily and the weekly time frame. And so obviously we're going to be looking to get long. Now, that being said, like I said, we do have to play it safe and keep an open mind because we are still in a bear market. The Fed is still raising rates. they're tightening. Like I said, it's not a conducive environment for growth in the market. So you can see this 200-day moving average is still, bearing down at price. So until we can get back above this 200-day moving average, I'm going to be extremely cautious. If we do get above this 200-day moving average, that's when I'm going to be a lot more excited. Okay, so keep a close eye on this 200-day moving average. If you don't have it on your charts already, I highly recommend you do. And this, nicely coincides with this area in here, right? Where we, once again, 2 closing days above the cloud, and then we have uptrend, get everybody long, and then gap down. Okay, so there's going to be a very interesting price action in here if we get here, because we have people that were getting long in this uptrend, gap down, and we also have this 200-day moving average that is literally smack dab in between this gap. Okay, so we've got heavy resistance above us. We have uptrend on the weekly and the daily time frames, and we have a monthly time frame that's improving. So this week is a really important week. We need to be strategic with how we allocate capital, if we allocate capital, and we're going to focus on relative strength like we always do. All right, so a couple levels I'm looking at is this 408.46 and this 200-day moving average. Nicely coincides with that. So roughly 407. All right, so go ahead and write 407 down. Now, this 200-day moving average is going to change, but this area, this general vicinity, is going to have, in my opinion, some very unique price action. Because if we also look, that price action isn't too far away from this cluster that we had, back in the summer, right? So this, 400 level, 407 level, this whole area, I'm expecting to be filled with a lot of tomfoolery. Okay, we're probably going to look like we're breaking out, and then we fail to break out, and then just to rip higher again. So be cautious in this area. All right, if we get here, if you're already long and we get up here, this is probably a good area to start scaling profits and taking some chips off the table and just leaving some runners on and waiting for, confirmation of price bull flagging above this 200-day. And if not, if that's not your style, just be patient and wait for higher odds. We're still in a bear market, guys. We don't have to trade every day, and we certainly don't have to pick the bottom. So with that said, let's take a quick look at crypto. Yeah, crypto is not doing great, as I'm sure most of you know. We've had a lot of stuff happen this weekend with some exchanges with FTX. I'll let you guys go ahead and do the research on that. But that definitely had a dramatic impact on the markets. And yeah, we're seeing this same pattern repeat itself. We lower highs, lower lows, and breaking uptrend lines to move lower, break this uptrend, move lower, break this uptrend line, move lower, and finally this uptrend line just got broken. And so, yeah, this does not look bullish. And, I've said it 1,000 times. You guys know I'm still extremely bullish on the technology of Bitcoin and Ethereum. I think these are great long-term plays. And anything around these areas, I think, are fine to accumulate if your time horizon is anything over 3 years. So I know I'm not the type of person that likes to buy the dip, so to speak, but these levels are starting to get attractive to me for from an investor standpoint. So keep an open mind in Bitcoin and Ethereum. And one thing, let's actually take a look at energy, since I guess it is our only holding right now in the investment portfolio. So yeah, energy, guys, is still looking really, really good. We had a couple days where it looked like, wanted to shake some people out, and now we're moving higher again. So monthly time frame, we're back above the 2008 highs, which is good. We're coming into the summer highs from this year, And we've got some May 2014 levels right around 100. So $100. Yeah, I think that's definitely a reasonable price target for XLE for energy. And on the weekly time frame as well. Yeah, this looks really good. Continuing to hold the cloud and print, strong weekly candles. And then on the daily, yeah, this is an important level up here. This is a breakout level, 93.31. So above 93.31, that is a breakout. If we can close above it, I do expect this to continue to move higher, even though we've already, been leading the market and are extended. I do expect energy, if we can break above this 93.30, I do expect it to continue to roll. So we're going to stick with energy because it's working and it's continuing to work. You might notice that I have a trigger set at, what was it? This candle's low. Yeah. So the November 2nd low, roughly 87.80, right? Roughly that level. Below there, uh, probably, take the trade off and take my profits. We've been long since this bull flag in here. Certainly don't want a trade to go negative, and it's been performing well in the investment portfolio. And if this does break, I think it does probably bring the rest of the market with us. So we'll have to obviously keep an eye on our allocations in the portfolio. So again, to wrap up, the monthly time frame is in no trend. I'm sorry. Monthly time frame is in. Is it in no trend? I'm going crazy here, guys. Monthly time frame is still in downtrend. Okay, still downtrend on the monthly time frame. And what we need to see for a no trend is we need to see a monthly candle close above this cloud. We're not there yet. So still in downtrend on the monthly. Weekly time frame, we've got uptrend. We're above the 10-week moving average with price trend confirmation above that previous week's high. And the daily as well, uptrend. So uptrend, and downtrend on the monthly. So be cautious this week. We're going to be looking long. We're going to be focusing on relative strength and keep an eye out for adjustments to the investment portfolio because we'll likely change some. So I'll see you guys in the open.